Hi, I'm Jeff Lovell, a staff accountant with AA Accounting, and today we're discussing the pitfalls and opportunities of buying an existing business. The most important consideration is whether to buy the outstanding stock of the prior owner's corporation or to buy the assets outright. Stepping into the shoes of the prior owner as a shareholder creates an easier transition for you and produces good tax benefits for the seller. However, you also inherit the prior owner's credit history, unemployment tax rates, and outstanding tax debts. By buying the assets, you can establish your own credit tax rates and debts, but the transition may be slightly more difficult and is not as good for the seller. If you do decide to purchase the outstanding stock, be sure to get a copy of the corporation's prior year tax return along with a copy of their depreciation and amortization schedule. This schedule will allow you to create more consistency in your depreciation deductions, and any prior year losses may also be shown. You may also wish to consider acquiring new federal and state ID numbers for your business, since this can save you a lot of money in penalties and interest, since you won't be inheriting the prior owner's tax rates or outstanding tax debts. If you purchase the assets in the year of the sale, both the buyer and seller need to attach a completed Form 8594 to their respective tax returns. If the sale of the business will take place over a period of several years, the buyer may need to issue Form 1099 to the seller each year and Form 1096 to the IRS, and the seller may need to attach Form 6252 to report the installment sale income on his or her tax return. Form 8594 establishes the basis of assets for both the buyer and seller by allocating the purchase price of the business to different classes of assets on the basis of their liquidity. For example, if you buy an online company with no physical assets for $30,000, the entire $30,000 would be allocated to goodwill, which would then be amortized over 15 years, producing a tax deduction of $2,000 per year. By contrast, if you buy a cake shop for $160,000 and acquire the assets listed in the table on the screen, the purchase price must be allocated to each class in order, leaving $50,000 to allocate to goodwill. Remember, it's not what you know, it's what you can prove in court. Keeping good records is required by the IRS, state departments of labor and departments of revenue, your bank, the Small Business Administration, and investors. It also saves you money by avoiding late fees, penalties, and interest, helps defend your business against unjustified lawsuits and unemployment benefit claims, and covers you under audit by the IRS, state departments of revenue, or insurance companies, and is generally a good idea. If you have questions or need help, call the business experts at AA Accounting. We're available year-round to assist you and look forward to hearing from you. We can help.